All right, good morning. This is Business AM. We talk investments because, as we all know, it is Investments Monday. Today, we ask the question, where do you take your money? And to help you understand the open markets to you, we are joined on Business AM with the CEO, AIB Capital. Paul Moy is in the studio with us today. You ask me what he's doing, I will tell you is going to impact the weight of the money in your pocket. We've already talked about the narratives that exist in our economy. You need to be rich to invest. Land is the way to go. Buy a vehicle. Be a landlord. All right, you need to be rich. But is that really true? If you're trying to run away from that narrative, what options are therefore open to you as an investor? And who is an investor? Let's understand that as we talk stocks exchange this Monday. Thank you very much for coming to the studio.
Thank you.
Do you love our studios?
Fantastic. Really
They're
nice.
good.
Yes.
Yeah, we're trying to settle up and talk business the way that people are supposed to talk about it.
Absolutely.
Anyway, how are you doing this morning?
I'm very fine, thank you.
Yes.
And thank you for having me in your studio. It's a real privilege to be one of your hosts.
You're
this morning.
always welcome. You're
Yes.
always that door is for you as well.
Absolutely.
Anytime you feel like you need to say something,
Absolutely.
knock on our door.
Okay.
We're here. So let's understand.
Yes.
Is it true that in the Kenyan economy that you need to be rich to be an investor? You have to have millions in your bank account, and the only open place for you is to be a landlord, buy land, and buy a vehicle, put it on the road, get money. Do we have other open markets?
It is not true that you need to be rich.
Yes.
Because investment is really a factor of how much you save. So,
Yes.
when we talk about China, for example, they say their savings culture means that people save almost 45% of their income. And that's probably why the economy has grown in China.
Yes.
Because that savings then translates to investment and creates jobs, and the economy grows.
Yes.
In Kenya, we don't save as much. So it's really a portion, even if you are earning 1,000 shillings,
Yes.
it's that percentage that you save. The question is, what options are there? Now we have new options that can allow you to save, some that are simple and accessible.
Yes.
We have the Makiba bond, with a minimum of 3,000 shillings.
Yes.
You can actually earn a 10% return tax-free.
Yes.
Now you might be wondering, 10% return sounds a little small, but in reality, 10% is not easy to come by.
Yes.
In fact, when you think about, if you, for example, thought you bought a piece of land 10 years ago,
Yes.
when you actually break down to the actual return that you have made over the last 10 years to create that capital appreciation,
Yes.
it's not very far from the 10%.
The 10% that you get.
What
from-
you have actually benefited from is the impact of compounding that over the years, and that is why you are saying, oh, my land that I bought at 50,000 today is 500,000.
Yes.
But in reality, it's just the impact of the compounding of maybe a 10-12% return.
Yes.
Yes.
So that sort of opens the conversation this morning. Let's then open that chapter. Let's talk about stocks,
Okay.
bonds, and stocks exchange.
Yes.
So somebody would ask you, somebody is somewhere saying, but I just know about Akiba, isn't it?
Yes.
What is a stock? What is a bond? And why should I trade into it?
Okay. So a bond, if we start with a bond is basically a loan
Yes.
to an institution. So it's the same way you could say, I'm issuing a bond and I want to give all these people a bond. They lend me money and I'll pay them interest at regular intervals.
Yes.
So, we are so used to borrowing from the bank, but this now is the reverse. So we are now giving our money
Yes.
so that we get a return.
Uh-huh.
So it's the same way you put a fixed deposit. In this case, the difference with the bond is that the bond is longer term.
Yes.
Normally over 1 year, 5 years, and some go even up to 30 years.
Yes.
But they pay you interest on a regular basis. Now, when you talk about government bonds are normally referred to as the lowest risk in the investment, because they say the government is the lowest risk in any economy.
Yes, and when you talk about lowest risk, it means you are sure
you are assured of getting your money back
within that period of time.
Within that
You're
period
going to
of
get
time.
it. You're going to get it.
You are assured of getting your interest payments.
Yes.
Those ones are assured as far as government is concerned.
Yes.
There has been very few, in fact only 1 or 2 cases of a government defaulting on its domestic debt. So when you lend to government will always pay you back.
Yes.
That one you are assured.
Because under budgetary provisions, you will say there is domestic debt.
There is domestic debt,
Yes.
whatever.
Yes.
So that is probably the safest bet you can make in any economy. And in Kenya, we have the advantage that even though it's the safest bet, it actually pays a significantly high interest of 10, 12, 13%.
Yes.
Depending on the tenor. The longer the bond, the higher the interest rate. So a Makiba at 10% tax-free, if you take that for example, is actually an effective, if you compare it to a fixed deposit, it's somewhere around 11, 12% because of the tax-free element.
Because of the tax-free element.
You see, if you put a fixed deposit, you'll still suffer
There's
the tax.
a little tax that comes out of that.
Which will bring you.
Yes.
Which is attractive. The other thing is to bear in mind that is 10% in an environment where inflation is 5% or 4%, which means your money is growing in real terms. Your money is growing faster than the cost of goods.
Yes.
So you are benefiting. You are at the end of the day, you are actually increasing your wealth. Because if your money just grows at the same pace as inflation, it means yes, your money has grown, but things are also more expensive.
Things are more expensive. So even if you're given that,
even if you're given that,
money,
it doesn't really help you.
Yes.
So that's the key thing about the bond.
Yes.
And we have government bond, corporate bonds. Government bonds are issued by government. Corporate bonds are issued by companies.
Yes.
And so those are the two basic options.
Yes.
In the bond market. Now the share is a little different.
Yes.
The share is you are now buying a share of a company. So if you take the example of Safaricom,
yes.
I am a part owner of Safaricom.
Yes.
I am one of the owners among the others, including government, Vodafone, and whatever. So when you put us all together, we are owners.
Yes.
We will share the profits that Safaricom makes.
Yes.
In the form of the dividend that they will pay. So that's the difference between the bond and the share. The key difference in terms of whatever with the bond, the interest is known. With the share, the dividend is unknown. At the beginning. At the time you're investing, you don't know what dividend they are going to declare.
Yes.
But with the bond, they tell you, no, we are going to pay this. We are going to declare this
amount. All right.
Yeah.
You're going to get this much.
You're going to get this
from
much.
This bond.
With Safaricom, you have to wait until they make their profit, and then they say we are going to pay a dividend.
We are going to pay
now,
this much.
because of that, the share is normally referred to as a higher risk instrument because of that uncertainty on terms of the future cash flows that you're going to receive as an investor.
And so before somebody wakes up and says, I'm going to invest probably in a company in Kenya, there's these factors you have to look at probably before you go get a share in a company. So what are these pointers that I should look at before I wake up and say, tomorrow, Safaricom is with me?
Okay. So the critical thing you need to think about that every investment is about you give money and you receive money back.
Yes.
So the key thing is the certainty of receiving that money back. So when you look at Safaricom, you say, when I think about all these mobile phone users, people are still calling and the cash flows, and Safaricom is making money.
Yes.
What is the probability of them not making money? It's probably less than maybe a smaller company. So you say this is the cash flows are more sustainable.
Yes.
And therefore they are more likely to pay me the dividend. The next thing you look at is the growth. Is Safaricom growing? Are people calling more? Or is competition eating into Safaricom's market share?
Yes.
Yeah. So then you say, okay, no, this company looks like it's going to sustain this level of profitability or even grow better.
Isn't it?
And you want companies with stable cash flows and sustainable cash flows, which are growing over the years. So those are the companies that you would want to look at.
Should I decide, therefore, that, look, I don't want to invest in Safaricom, but I want to put my money somewhere. What sort of scrutiny do I need to do in the economy to go to the smaller companies that are trying to push for something? What are these pointers that I should look in these smaller companies that might probably give me something better than Safaricom?
Okay. First thing you have to realize is that when you go to smaller companies, you are taking a higher risk. And therefore, the level of scrutiny and analysis needs to be much greater.
Yes.
Because then you need to look at them into much greater depth. But the analysis is basically the same. You say, what product is this company selling? Is it a product that is demanded by the general public? Does the company take too much debt so that it is higher risk? Because the higher the debt it takes, the higher the risk. And are these cash flows sustainable given its level of debt and everything over the long term? And then that's basically what you look at.
That's basically what you look at.
Yes.
Therefore, let's just put this conversation into perspective. Therefore, there's a young man somewhere, right? He has money. He has this 5,000 shillings. He has this 10,000 shillings, and he wants to put it somewhere.
Yes.
Therefore, who in the economy, provides this sort of information? Tells me, Simba, you don't need to go to Safaricom, go here.
Okay.
You don't need to go there, go here now.
All right.
Is there like channel flow? Where do I get this information from?
Absolutely. So we have firms. So if you take my company, AIB Capital, for example, we are a stockbroker.
Yeah.
We do the sale of bonds and shares. And we do research on this so that you don't actually have to go yourself and start looking at the research of the underlying companies. So we provide that as a service to our clients, so that our clients can then, we look at the cash flows, we look at the profitability, and we produce a research report saying we recommend this particular investment. You need to go there.
You need to avoid that.
Exactly.
You need to look to that.
You need to look at that.
That's really key when you're trying to make an investment choice, isn't
yes,
it?
exactly.
All right, let's therefore
so the critical thing first is to choose a right service provider.
Yes.
The right broker who will give you research, will give you information that will facilitate your investment. Whether it is in bonds and equities,
yes,
so that you now have the good information to invest with.
So now, I want us to, now that is in perspective. Somebody who's looking at this market, all right, and says, I need to invest in this market. But before I do that, I need to know some of the market forces that are operational in this market that sort of make the market stable or unstable. I want us to look at the risk area.
Okay.
What makes this market unstable when you look at the Kenyan economy?
When you look at the Kenyan economy, so one of the things that's key, first of all, we operate in a global economy. So if you take, for example, the Kenya stock market, 70% of it is foreign investors.
I'm actually going to ask that question later on in this conversation.
Absolutely. So what happens is that when things happen in the global economy, they then begin to translate to us. So, for example, towards the end of the last half of last year, we saw the stock market decline significantly.
Yes.
That was triggered more by foreign rather than domestic issues. So first, the one risk that we have is that we're in a global economy. When things don't work in the global economy, then we get the impact of that. The impact of that. The other thing that affects the environment, which is critical, is our macroeconomic environment. So here we are talking about the growth in the economy, the inflation rate, the stability of the exchange rate, and interest rates.
Yes.
If you get that, what we call macroeconomic instability, then you're likely to have an impact on the economy.
Yes.
So you want to invest in an environment where the economy is growing, where interest rates are low, where inflation is low, and where the currency is stable.
Where the currency is stable. And that means what essentially I'm getting from you is that should you go into this market, you're essentially a trader in this market.
Yes.
And so those are the factors you should be aware of every single time.
Absolutely.
Isn't it?
Absolutely.
So you need this information flow.
You need that information.
Such and so is happening. The inflation rate is at this level.
Yes.
We're now into a bad political time.
Absolutely.
Isn't it?
Yes.
Because I want us to talk about, is it majorly, when you look at, don't base it on the amount of foreign traders that we have at the NSE, for example, but now base it locally at the performance of our local companies on the NSE. Would you say that it's political climate in the country that majorly affects that? Because I know in 2017 we had the NSC crashing.
Okay.
Remember when the High Court annulled President Uhuru Kenyatta's election? We had it for the first time crashing.
Yes.
What sort of translation is that? Should I be aware of these factors?
Yes. Absolutely. I mean, you can't ignore the political factors because
Yes.
the politics will translate into business. And when you get political uncertainty, that also affects the growth in the growth in the economy,
Yes.
and hence the growth in the price of shares.
Okay.
The basic thing is that the stock market hates uncertainty.
Yes.
It loves certainty. Whenever it gets uncertainty, it'll pull back.
It pulls back, isn't it?
It pulls back. When it sees a greater future and greater certainty,
Yes.
it'll continue to grow.
Mr. Moy, let's talk this market therefore. Here's the thing. We do know that the number of companies, local companies that are listed, 64? They're 64,
Yes,
isn't
around,
it?
around 64.
Around
yes.
64.
Yes.
But if you look at the companies around the country, there could be around 300,000. Therefore, are we seeing what we're reading into this? Because if I want to get into this market, then I need to get options.
Absolutely.
You know? It's a wide area that I need to invest into.
Yes.
But am I not limiting myself to just 64 as opposed to getting the 300,000? What are these factors that are making this market this way? Why do we have only 64 listed?
All right.
Why don't we have the 300,000 listed?
Yeah. It's a very good question. I think, we've not seen, or maybe over the last 10 years, a lot
Yes.
of listings in the stock market. What we need to do is to encourage people to come and list their companies into the stock exchange. That will give people an option on where to invest. One of the key issues is that, one, the government was a key player in this. And the government is the biggest player in any economy. So the government's privatization program
Yes.
has almost come to a halt. They have not listed or privatized a company in the stock market since Safaricom, which happened in 2008.
Which happened in 2008, yeah.
That's almost 11 years ago.
Almost 11 years down the line.
11 years down the road, you're not getting that.
Yes.
The other thing is that companies, we have a lot of private equity companies that are providing an alternative way of funding,
I see now.
which perhaps people are preferring because the responsibility of having disclosure to the general public,
Yes.
they would like to share off. They would rather be disclosing to one person
Yes.
than having to be accountable to
every face in front of the public.
in front of the public.
Yes.
So part of that is what has perhaps made people shy off from investment.
From investments in this market,
Yeah,
isn't it?
yeah.
People will say this. Look, for you to be listed at the NSC, all right, there's a lot of process. There's a lot of levels that you have to hit.
Okay.
All right.
Yeah.
And so people look at it and say, this is really very difficult for me to do.
Yeah.
Would you say that we need, therefore, because we want to open this market, we need therefore to really look, all right? Say, look, yes, you can come.
Yes.
We are safe for you.
Yes.
But therefore we lessen these regulations that you have to hit before you get listed.
I think, yeah, you're absolutely right. I think this is probably in the past, and now we are looking at the new programs that the NSC and the CMA are putting together,
Yes.
which are perhaps making it easier for people to list. So, for example, we have the GEMS market.
Yes.
If you list in the GEMS market, there's no need for you to go through the CMA approval process. So you can actually now get an easier and more flexible route to go into the market.
Yes.
The NSC has also recently launched the Ibuka process, which effectively says if I want to list,
Yes.
what I can do is that I can get into an incubation program.
Yes.
So the first thing I get is visibility. So you're shown there as one who has an intention to list and to come into the market. And then you now get people to take you through the process. So you come from incubation
Yes.
to acceleration and then to listing. So that you are carried through the process and makes that a lot easier than perhaps it has been in the past.
Yes.
And you have a time to also build the learnings and to understand these things with time.
Understand these things most of the time.
Yeah.
Let's talk
And
about
that has been very successful. We already have four companies who are on the Ibuka program.
Yes.
Given their intention to list. So all of a sudden we have a shift in the market.
A shift in the market.
From almost a drought in terms of listing, we have four who have
that's
openly declared their intention to come to the market.
That's
that's a big jump.
Here's the thing. Let's talk about, I know now you're talking about the GEM segmentation.
Yes.
I know we also have the real estate trust,
yes.
right? Real estate investment trust segmentation, yes. Again in the NSE.
Yes.
Someone will ask you, is it not time therefore to introduce further segmentations in the NSE? So now more people in different sectors would say, yes, we are not sort of pooled among the giants and the smaller companies at the NSE. So we belong to our own sector where we have our own sort of rules to play with.
Absolutely. And I mean the REITs, which is a real estate investment trust, is an instrument that allows investors to buy property through the stock exchange, and you can buy a small part of this building, as opposed to having to buy the whole building, and you can benefit the benefits of that building. So that's a new category that also is expected to grow, and we are expecting also a lot of those. We have ETFs, which is electronic, exchange traded funds, which are also quite a number. We have a gold ETF in the market. We have a number of others also in the pipeline coming in. We have derivatives coming in. So instead of buying the actual share, you can buy a derivative of the market. So you can say, I would like to invest in Safaricom, but I am saying that in the next 3 years, I expect the price to be X. In the next 3 months, so I can buy it forward.
Yes.
You understand?
Yes.
So I can actually say I want to buy Safaricom price as of 3 months forward. And that gives you an exceptional advantage.
Yes.
So the other thing is that those particularly the derivatives market, it's a very fast market.
It's a fast market.
It is fast market. You can buy and sell very quickly.
Yes.
You know it's more efficient in terms of the trading, and therefore for an investor who is a speculator and would like to make money, then he would probably go into the derivatives market and buy and sell very quickly.
I want us to put a nail to this conversation, therefore. But therefore, saying that for us to sort of take this investments market to the people, we do not understand where the people are, and they're online on their mobile phones, isn't it?
Yes.
All right. That sort of brings me to your product, AIB. That is the DigiTraders product.
Yes.
So tell me the conceptualization of this product and who it's actually targeted.
So this product is targeted at the Kenya investor wherever they may be.
Yes.
One of the biggest challenges for Kenyan investors, and I'm talking about even in the ones in diaspora, one of the biggest challenges for people to invest in the stock market has been the process which you have to go through to whatever. You have to fill in the form.
Yes.
You have to bring your photograph. You have to bring a copy of your passport or ID. You have to bring a copy of your bank statement. And then after that, only after that, do you then now get an account and you're then able to begin to trade.
Yes.
So we decided, is there a way that we can go around that so that somebody in any part of Kenya, in Turkana, in Marsabit, in Wajir, can be able to access? And we thought, with the digital revolution that's going on with mobile phone and the Kenyans' acceptance of mobile phone, we can actually do it. So we took up the challenge, and we were able to use IPRS, which is the National Registry of People. So what we then do is we pull data from, once you key in your ID number on our platform, we tap into the National Registry of whatever, and we pull your data.
Yes.
So whatever is in your ID records. We therefore then send this to the CDSC, which is the Central Depository and Settlement Corporation. That then enables us to open an account without you having to come into the office.
To come in person.
In person.
Yes. Sort of cut that process.
Absolutely.
Yes.
Absolutely. And then you're able to fund your account through M-Pesa. You can then fund your account through your bank. And you are